Hello everybody, Crypto Vince here. Good morning, good afternoon, good evening. I don't know which part of the world you're at. Anyways, what I wanted to do here, I was going to do for the premium member that are in my chat, but I will do for everybody this time. Um, so what I wanted to show you guys is that how and why I traded this setup, this short setup, and how to open a paper trading account. Paper trading account is very important if you're just at the beginning of your journey, of your trading journey. You want to learn. Um, Paper trading allows you to make a fake account with some money and see how you go by following history, the orders, the position, and so on. You can actually use the risk and reward tool in order to open your trade, close and set up stop loss and take profit and so on. Let's start with the paper trading account. And you go here at the bottom of trading view. There is paper trading, or you will see forex.com. Me, that I use forex.com, which is connected with TradingView. I can click forex.com and I will have my forex account that is connected with my TradingView. Or you might have a FXCM, AMP, Wanda, Gemini, and so on. But for now, we'll use paper trading. So I click on paper trading, and then you go here. You can reset your paper trading account. You can start with, I don't know, $1,000, $10,000, however you want. Click reset, and you're good to go. So what happens now is that then if you want to open a trade, and let's say, for example, I want to buy right here when price reaches this level. This is just an example, and it goes, I think it's gonna go all the way up here. I set up my long tool, then I click on the right click on the tool, create limit order, and you will have all this messy thing. And this is your position size calculator. It will calculate everything for you. So all you need to adjust is your risk. So if I want 1% risk on this trade, I will put 1 and it will calculate here for me in dollar too. So since I have $10,000, 1% risk of $10,000 is $100. Or I can set the quantity and it will put the risk for me, right? If I put 150, the risk of course will be higher. Anyways, usually it's 1% for professional traders. I suggest to go lower if you want to. If you are at the beginning, I will also go with 0.01 and 0.01 sometimes. But remember, with TradingView, you are allowed to trade if with a minimum of 100. Sorry, 1,000. Okay, so if you put 100, it won't let you trade. Okay, so I go here 1% buy, and it will set buy limit, stop loss, and take profit perfectly with your risk and reward tool. So when you will reach here, you will get filled. You will see your position here, pretty much like BitMEX. Here my orders, if I want to cancel them, if I want to adjust, and then your account of course will change while the price goes on and off. Let's see if we can let's cancel this. See if I want to market buy this market. 1%. Okay, see now I'm in the position because I market bought. And you can see here the equity is changing already. I'm in profit -4, and it's live, so it's a very good tool to use. I suggest you guys using paper trade if you are new to trading. Don't use money. Learn without money and see if you are able to make a certain amount of R per month. For example, if you can make even, I don't know, 5R every month, that's good. So when you do that and you're able to constantly make a certain amount of R every month, then you add the money. As soon as you add the money in your trade, the emotions will come, and that's the most difficult part of trading. Um, Even though you can be the best trader and you're able to make 5 hours a month with your paper trading, when the money comes, the emotion will destroy your trades. So you have to be able to manage your emotion at that time. So you need to learn trading first and then apply psychology, because trust me, when money is in the game, it's not easy as when you don't have money, because your risk changes quite a bit. Okay, so I suggest you guys to use this paper trading account and see how you do. Anyways, I'm just gonna close my position now, and here we go. I lost whatever, $6. So now I finished with the paper trading. Let's go over the trade. Why did I choose this trade? I was hanging out with the trader Timon, so this setup, um, I took this setup because, and thank for trader Timon, and I would like to show you guys how I did it. We shorted this supply pretty much. But I don't know if you know, remove drawing tools. There is a feature here that can replay the old candles. So we were about right here. Okay, I'm just gonna cut. So what happened? We started to trace our level. So this is a double bottom setup. Then we had another support resistance flip at this level. And what's happening here? The price was being pushed down here, got pushed down here too, and we have our demand that were always tested. So the first demand was here and was tested by this demand. Let's make it blue light. No, second. Let's make it blue. No, you can see that here. Then there was another demand that was tested. Okay. Then there was another demand here. That was tested too. So all the demands are all the red candles where buyers buy into it. So the price goes up from the demand, comes back to retest demand and goes up, comes back to demand and goes up, comes back to demand and goes up, comes back to demand here or not. No, it didn't come back to demand. So now it's where we stop. Okay. Oh, here's where we stop. So first of all, I'm looking at the chart on the 1 hour time frame. Since when we scalp Forex, most of the time we scalp in the 15 minutes time frame. The daily is not as important, but sometimes it's good to have a look also at the daily to see where we at. At the daily is showing if I add some moving averages, showing a breakout of the moving average 200, a retest and another retest. So by looking this chart, I would be bullish, but it's such a far time frame, the daily, compared to the 15 minutes time frame, that is not going to help me that much. In fact, we went short at the end. What else can we trace on the daily time frame? We can trace a Fibonacci of the overall move just to see where we are, and we are on the 61.80% Fibonacci retracement. Another sign that tells us that we might go long in the higher time frame, but we still went short on that 15 minutes time frame. We have a block also that is creating this support locally. Okay, so we go back because we really don't need all that mess. What we are what's happening right now, it's a consolidation on that breaker block. Okay, price is going up and down, up and down. Before it was dropping, right? And every single supply was tested. Supply tested here, another supply tested here, and this supply not tested yet. Okay, so this is from the higher time frame, the 4 hour. Then we go in the 1 hour, and that's when we start to like zoom in because we want to make our little trade here. Okay, so what was not tested here yet, that we say, was this demand. Okay, so what we could think that we could have traded was a bounce on this 1 hour demand. So price to go here and come back up for a trade. But we didn't decide to do this because we saw a green candle. If this was red, it would have not created a resistance. But because this candle became a closed green, create resistance. So I can go back more. Let's see if I can. Here we go. If I was here, I would have said, okay, if red comes and touches my demand zone, I'm going to long, because I will be able to arrive at least to the top of this candle. But what happened right after? A red candle appeared. Didn't touch our demand, so even though I would have placed a trade here on this demand, I would have not got filled, right? And then again, let's see what happens. Green candles. Now, because of this green candle, this is crucial for this trade. Because of this green candle, we are not able to long this anymore, because this will be resistance. If this was a red, okay, we could have went higher, but because this green candle became resistance, we could have just traded this, and it was not enough space to trade, because the stop loss we usually enter on the top of the block, right? And stop loss would have been very tight, and this trade would have been like maybe a 1 hour trade, but it was not a great trade to do. So what we did, we decided to wait and see how the market what the market showed us. If we go in the 15 minutes time frame, what we see is another demand. This demand is very important because it's the demand that gave the start of this pump right here, right? Okay, Would you trade this? Yes, I mean, but not now because we were already late. We could have traded here, but again, you had no space um, to make your profit because green candles were showing up. Those are resistance. If you guys see, it's all supply, supply here, supply here. So why trade this little space from here to there? It couldn't have been a nice trade. So what we did, look what happened here. We have our major block, our major demand at this level with another demand on top. When this happens, which block is the most important one? Is the one in the higher time frame. So if I go on the 1 hour, that's the block. Here I got nothing. So that block is not as important as the block in the 1 hour time frame. Okay? So by looking at all those scenarios, and because here sellers push down and create a resistance, instead of going long as we thought at the beginning, we decided to go short. Look at this wave, the wave that happened here. Do you see any green candle like happened here? No, you all see red candles. In fact, price, when touched the demand, rallied pretty hard. Okay, let me make this demand green to show you the similarities and the differences between wave 1 and wave 2. Look at them. Wave 1 comes back up to the demand, comes down without any green candle, and comes back up. Now this wave comes back down to try to test the daily, but it didn't yet, and printing a green candle, which is resistance. So this supply, and let's keep going with the candles. Look, another red one. Boom! Look at what this candle did. This candle tested our 1 hour demand, but could how you say in English? We couldn't get a right trade from here because we would have entered here and sold here at resistance, at supply, however you want to call it. I don't know what's wrong with my English today. I just got awa 3 times. Anyways, um, so what we decided to do is to short this supply because we saw a major rejection on top here and all our block already tested. All the previous block demand were already tested. Let me make it blue. What happened when those blocks are already tested? The bounce probably won't happen this time. So it will just drop all the way down because demand were already filled. Okay, so what we decided to do at this point, we're like, okay, it's time to short this from supply because probably this is changing market structure from bullish to bearish. So what I did, we set up our short tool at the top, at the bottom of the block of the supply, and we place the stop loss on the top of the wick here, and then we split this in two. We split the demand in two, and we move our entry in the center, the equilibrium of the block, and then our target possibly located at the bottom of the support, the extreme support. These high, those are liquidity. So here you have to imagine that there are many stops, right? Liquidity many stops are here, right? I can write stops. Okay, so they might get hit and price might follow even more, because there are stops of people that are going along, right? If they get hit, there will be a chain sell also. Okay, so let's see what happened. This was a 3.39 trade, safe, away from the wick. Stop loss, guys. You know, I place it here. I have this like little method, but you guys can be even place it straight to the block or at the wick or whatever. But I or even higher to make a 2.34. You can watch the video about my stop loss, how I set my stop loss to be more precise or to change my risk, but this is the setup. Anyways, let's see what happened then. The block didn't hold. In fact, you see, this time it didn't hold. So if even if we traded that block, we would have got stopped out probably if our stop loss was too tight. Then it came back up very quick. Here we go. You see, it goes to touch our supply level, the equilibrium of the block, the center of the block. That's where there is more supply. Okay, and then started to stay there 1 2 3 4 5 candles before it started to drop. So 1 2 3 4 5 6 1 2 3 4 times, 4 attempts to enter this short setup, and then after again, so 1 2 3 4 5 6 7 8, and then boom, all the way down for a magical 3.9 R trade. So why did it dump so hard? Because it didn't have any more demand. Price didn't have any support where it could have bounced, because that support, that demand was already taken. I know this is too much for guys that don't play price action, but this is how price action works. And I barely look for indicators or patterns, moving averages. There's just nothing here. There's just buyers and seller and horizontal levels, supply and demand. And it's an ICT strategy. It's pretty well known, and it's very advanced, I gotta say. What else can I add here? If you guys have any questions, go ahead. Oh, here, when we were discussing, you remember when I told you I didn't want to see a green candle for me too long, this 1 hour demand. If I didn't see this green candle, I would have long this all the way up. But because I've seen this green candle, I didn't long this, even though I could, but I didn't have too much space. So we decided to short this level, okay? But look what it did. Look what the price did. It didn't dump directly from here, but it touched here, went back up, and then dropped. Why did it touch here? Because this run, while going up, left a red candle, which is a demand, which is a support. So price went all the way up, came back down to test the demand, and then went up and crashed because of the supply. So if this red candle was not here and was printed as a green doji or a green candle, probably the price would have dropped right away. Okay, so that's a little thing. um that's it. I want to keep this video short. I don't want to make another 2 hour video as I always do. Make sure you watch from the beginning if you didn't understand very well what I explained, and make sure you paper trade a lot before putting money into the market, because there is time. There are many markets you can trade. There are many time frame you can trade. There's always something that you can trade and you can make money. Remember, don't focus on percentage, but focus on risk and reward. This what I mean by that, I mean that this trade is a 3.021 is a 3R trade, right? And it's 0.17% and 0.52%. This trade is the exact same trade as this one. The ratio between the profit and the stop loss is the same. The ratio and the stop loss. Here is 0.39, here is 122. Even on Bitcoin, if I pick on Bitcoin, oh, come on. If I pick on Bitcoin something that goes way higher in percentage, like 20%, and the stop loss there is just 10%, 35%. This trade that goes 20% together with this trade and this trade, they will all give you the same amount of profit if you're able to calculate your position size and manage your stop loss. To do so, you know what to do. Go on my channel and review the position size, the risk management and position size video. Okay, well, hopefully you understood something and learned something today. Thank you so much, and I will talk to you guys later. Bye bye.